Okay. Does it cost to use a mortgage broker?
There is no out-of-pocket expense for a customer. The bank pays your mortgage broker for the loan. So,
Right.
yeah, I would say there's no out-of-pocket expense for you to use a mortgage broker.
So if I went to you and you're like, yeah, we can do this loan with this lender, the interest rate is 8.9%, all good. You could probably go direct to that same bank, that same lender, 5.89, same rate. It's not a more expensive rate to you.
No.
Just in the background, the banks have said for distribution, we're using more brokers. So we'll just pay, instead of paying rent and cleaners.
A lender in a branch.
And all that stuff, a lender in a branch, we'll just outsource client acquisition to mortgage brokers and pay that cost.
And sometimes I would say we have more pull because we have other lenders to compare them to, where if you walk into a branch and they see that you need them, I wouldn't say their rate is going to be as good as if you come to a broker, because we can give them comparisons and show them what other rates
and they
have
might
to
match.
offer. Yep, they generally match.
What, with the same bank, or can you be like, hey, Macquarie, we want to put a loan with you, this bank down the road, CBA is doing this rate, will you match it? Have you seen matching before?
Absolutely, yeah,
Right.
all the time.
Okay.
Generally, with the major lenders, they only compare major to major.
Yep.
But then other smaller lenders will go competitive to major as well as the smaller lenders. So,
Can you do me a favour while I fill the air? Can you give me a current mortgage rate for, like, we're in Newcastle Permanent Building Society. Can you find just a standard rate and then find a rate for me for an equivalent top four?
Yep.
Because I'm curious to know, because I want to make a point. I was thinking this the other day when it comes to, so there's banks and building society, building societies, they're not listed on the ASX. It's basically owned by all the clients, effectively. So once you pull that up, we've just got Genevieve with her.
I've got it here.
Yeah, okay,
Are you hoping
You
that
don't.
the-
You
Are
just.
you hoping
no.
that the smaller lender's going to be better, Glenn?
I'm going to surprise you. I just want to know before I make my comments.
Okay, go.
All right. What's Newcastle Perm?
So if we're comparing apples for apples,
Absolutely.
so products,
Yep.
so we're talking about a packaged product with offset.
Yep.
The rate with Newcastle Perm variable is sitting at 594.
Yep. And what about a top four?
I would say about around
Can you give me a name?
589.
Can you give me
CBA.
Okay, yep. CBA 5.89. Okay. What's the annual package fee
395.
for CBA?
Yes.
That's the Pro Pack, isn't it?
It's the MAV package.
NAV?
MAV.
MAV. And then what's the annual fee for the perm?
You are really testing me here.
Well, we're not here to
Sorry.
FBs.
I want to say it's 395.
Okay, either way, it doesn't matter. My point is, and it's an irrelevant point, and it might not even make the podcast, but it's just interesting and it can be, whether it's Newcastle Permanent, I think they've even sponsored one of our shows before, all good, it's fine, or whether it's the Greater Bank or an ME or all these kind of banks where they advertise, we put our members first, it's profit for members and all that stuff. Well, if that's the case, why isn't your rate cheaper? I don't know. For me, but again, it's not just about the rate. The rate's almost the last thing that you look at, right? Because you want to filter down.
Yeah, I would say the rate is sort of the last piece of our puzzle before we send our options to a client.
Okay, talk me through, because this is a bit of a procedural thing.
Yeah.
I call up, hey, Genevieve, heard you on the Money podcast. I want to buy our first home. We've got 100 grand in savings.
Yep.
Awesome. Congratulations. Can I have some money? Here's our income. We've got 100 grand for me, 100 grand for them, 200 grand household income. We don't have help debt. Where do you go from there?
Yeah, so I guess our process is that we request all the client's information. We sort of paint a picture in that initial appointment of what they're looking to do.
Yeah.
And then my next steps are emailing the client scenarios.
Okay.
So if you buy for this, this is what it looks like. If you buy for this and want to use this much deposit, this is what the repayment's going to look like.
Okay. Have you talked bank or lender yet with them?
Absolutely not.
No. So
we're just talking scenarios.
Right.
So because even though the client says we want to buy for $850, once I present that scenario, that may not feel comfortable to them.
Right.
So
But you've had to peg the scenario to some type of rate. Or are we just doing...
We're just doing scenarios
as in purchase price and deposit needed?
Yes.
Not monthly repayments?
I do quote a monthly repayment, but it's always just a very...
high level.
Basic estimate, approximate figure.
Okay, so initial chat, you've got their info, so you will ask for last 2 years' tax returns maybe?
No. So, it depends on... if you're self-employed, if you're on wage, let's just say you're on pay slips.
Yeah.
We request 2 most recent pay slips off them. We go through scenarios. Like it may be a back and forth of a week of scenarios before we're even getting to that point of them saying, okay, we want to purchase for $850. That means their loan amount is, say, $760. So then we go and look at lenders, and this comes into factors of, okay, their max borrowing capacity. So 760 might not be their maximum borrowing capacity at the best lender or best rate. So then we narrow down lenders. So, you really want to narrow down your scenario, your LVR, so your loan to value ratio, how much you're buying for, owner occupied, principal and interest, all of those things before we even start talking about a lender.
Okay, so you've emailed strategy like, you can purchase at $850. You'll need to put 90 grand of your deposit in.
Yep.
10 grand for some costs.
Yep.
We're not due, I don't know, is there LMI? Sure, whatever. And then you're like, is this kind of the direction we want to head? And they go, yeah, I think so.
Yep.
Then you'd probably know there's going to be 1 or 2 lenders that would tick that box.
Yep. So then we narrow it down, and generally the comparison is we send out 3 lenders.
Okay.
So
and
we'll
you
do a
always
comparison.
send 3 lenders?
Yeah, as a bare
Well,
minimum.
I mean, there might only be 2 that will do that unique situation.
Exactly, but we still always put in. So even if only 2 lenders did the LMI waiver, as an example, I'll still put the 3rd lender and show them what it would look like with LMI.
Right. Okay.
So they can see that comparison and saving and what that would look like.
Yeah, and that's right. It's like, yeah, sure, you can go to, before, you can go to CBA. It's 5.89. You might have to pay a little bit of LMI, or the perm does 5.94, more expensive rack rate.
Yeah.
But you're saving 20 grand.
Yeah, or you could borrow more, or it's like some clients choose a bank based on how many offset accounts they offer, not on the rate.
Yeah. Okay, cool. Then you've sent them 3 lenders.
Yeah.
And they go, okay, we want to go with
ING.
Ing, as the people say. What happens now?
Yep. So then we start proceeding through the application process. So,
and does that mean you'll need to formalise documents from the clients?
Yeah. So we do ID verifications. They sign application forms. They sort of sign compliance to make sure everything that they're given.
Do you prep the application forms for them?
Yeah, absolutely. It goes all to them once it's prepared.
Yeah. Okay.
Yeah.
Is it e-signature or wet signature these days for most of them?
E-sig.
Awesome.
For, I would say, 95%.
Yep. So you'd prep the application with that bank or lender.
Yep.
You would pretty much gift wrap it So when it goes to ING in this instance,
Yep.
it's got the best chance of them not wanting to ask more questions.
Correct. Yep. So we package it all up. You sign to say everything's accurate, the funding positions, the income, your assets, liabilities, all of that kind of stuff. And then once you've signed that, within about 24 hours of you signing, that then gets submitted to the lender.
Right. Okay.
And I had a client a few months ago choose a lender based on their quick turnaround times because they were going to an auction, not because of rate.
What's some of the quickest turnaround times you've got?
24 to 48 hours
Right.
from submission.
Yeah.
Yep.
Okay, so the application goes into ING. What happens there? It goes over an assessor's desk.
Yep. So it goes to a credit assessor.
Yep.
Depending if they have any questions or not, they'll come back to us with that. It may be something that we can simply answer, or we will go back to the customer or client at that time. Or the next steps are that it gets issued an approval.
Okay, so with these, the approval word, so they would go, yes, is it always a pre-approval, or is it always an unconditional approval, or could it be an unconditional? What's the
It really depends.
traffic
If a
light
client's
process?
refinancing, you're wanting unconditional approval
Yep.
because we're moving your loan over. However, if you are wanting to go out and shop and buy a house, it would be a pre-approval.
So do you tell the bank or lender on the application that this is for a pre-approval?
Yeah,
because we
unless
don't have a
they've-
security
Unless
yet.
they've found a house and we're going straight to unconditional approval.
Right.
But generally, if you're buying a property, it's a pre-approval first.
And how long does that pre-approval last?
Generally 90 days, and
Yeah.
then you can extend it for another 90 days.
Do you have to provide any documents?
Yep, updated income, generally saving statements, those types of things.
Are most banks or lenders asking for updated stuff now to extend the pre-approval? Because I thought years ago they would just roll it out without checking.
They do, and they can also do another credit check.
Okay, cool. So if you are buying a house in the next 6 months and you got a pre-approval, don't go and rack up debt on your freaking afterpay, or go down and have all these transactions.
They will do. They
from
can
the
do
pub.
another credit check.
Yep.
Yep.
They reserve the right to do that. Yep.
Absolutely.
Okay, then it's been 2 weeks into the second pre-approval. You've found the house. Mm-hmm. What do you do? Do you tell the bank?
Yeah, so once you have had the offer accepted, we get a copy of that contract. Generally at that time, I'll do another scenario of how that loan is exactly going to look.
Based on the exact price that
Based on the exact price, and then we move that loan forward to unconditional approval. But it's actually like after 90 days, generally we're looking at clients' options. Even yes, you can reapprove your loan at that lender, but the banks are changing every day. So what might be good for you 3 months ago may not be good for you anymore.
Have you ever, once they've found the house and they've got that pre-approval, like, oh crap, we think we can get a better deal for you here with a turnaround time that's only 2 weeks. Let's now put an application in with this bank.
Yeah, or generally I'll convert the loan to unconditional approval with the lender that they already have, just to remove that stress from the process. And then we've got generally 4 weeks or potentially even longer until settlement. So that gives us more time to apply somewhere else and get unconditional approval elsewhere.
Right. Okay. So am I right in saying a pre-approval is literally just an approval that has a condition of you've got to find a house?
Yeah, and sometimes the conditions might be that you also close your personal loan.
Yeah, and we need to see a statement.
Or you're closing off your HEX. But generally, and this is broad advice, but I would say let's get an approval subject to you closing that personal loan, because if they purchased for cheaper, they may not need to close that personal loan anymore.
Yeah.
And they may want to keep it open. So
Okay, so you're saying, get a pre-approval subject to keeping the personal loan or not keeping it?
Well, so they may close it or they may not, depending on their borrowing capacity.
Yeah. And then, okay, so the pre-approval or the conditional approval, Yeah, so a conditional approval, it can be either you haven't found a property, so therefore it's
Yep.
pre-approval. You've got to show us your debt's paid off and a copy of this.
Yep.
We've got to see your fully completed tax return.
Yeah, there's honestly so many, like there could be multiple conditions or
Yeah.
it could be find a house.
Yeah. Okay,
Yeah.
cool. And then, that's right, because if someone was refinancing, you just put an application in going for a straight unconditional approval because we've got the property, they're PAYG employees, there's no issues here.
No.
Yeah, sweet. What we're going to do, we're going to take a break. When we get back, we're going to finish this fun little game. We'll be back right after this.
If you're after personal financial advice, don't get it from a podcast. If you would like help based on your own personal situation, head over to moneypodcast.com.au, click Get Help, and we'd be happy to introduce you to one of our trusted professionals. Our panel of vetted financial advisors and mortgage brokers work with people all over Australia so they can connect with you wherever you are. That's moneypodcast.com.au and click Get Help.